Good morning all. CamelbackTrading.org coming to you this Thursday morning, September 3rd. We're looking at the market profile of the SPY ETF here on Window Trader. And for once, the market is looking to possibly do something normal, which is after a trend day, have a little bit of a consolidation. Remember, we've had 4 price probes or price spikes to the upside the last 4 days. Right now, as of now, with an hour and 10 minutes to go prior to the open, and that is being rejected, right? The price spike, the price probe, and right now the set of single prints. ES only had 1 set. SPY had 3, right? We still have a little one here at H and a little one here at F period. So we'll see if those get filled. Now, let's go over destinations and a game plan for this morning. So right now, the upside, 358.63 was my overnight high. Yesterday's high, 358.75, all-time high. So as of right now, the all-time high is in the regular trading hours. Remember, the triple Qs is not, but right now they're nowhere near theirs as they are down $3.50 this morning. For the downside, 357.90 was the price spike. As of now, being firmly rejected. Then the single prints, 357.47 get filled at 35 cents. Right now, those are being filled. Then we have our pre-market low as of right now is 356.06, which is where we're trading right now. Then we have the other set of single prints, 355.80 get filled at 78 cents, and the other one, 355.33 get filled at 29. So they're both small sets. Then we have yesterday's low of 353.43 and filling the gap down here at 352.71, a 72-point gap. What's the game plan for this morning? Well, again, in balance, in value is the worst of your risk reward. Right at half back from yesterday, market taking a breather. I think a couple of things are important here. If in the next hour we open anywhere around here, what's going to be important then for me is K's high, which is basically where the singles filled or the price spike started. So where there were buyers yesterday, if we ought to rally up there, we'll see if there's sellers there now today. On the flip side, where change took place yesterday, right? We were in a nice 6 for 6 rotational day until F came up and then G started and we had the single prints. So change really took place in G period when you had these singles and took off. So between G's low and C's high is going to be very important. If the bulls hold, the bulls are able to hold, say C's high, nothing's really changed, right? They're still above, right? You could basically call this a double distribution day. So it's important for the bulls to hold C's high. If they're able to, nothing's really changed, and then we can go back and at least test where the price spike was. If they fail to hold this, then there's a good chance you'll go down and test maybe yesterday's low and possibly the gap. On the flip side, same up here. If the bears are able to defend K's high now, then we might get ourselves a balanced rotational day inside of yesterday. Maybe we have an inside day, which would make for a beautiful setup for tomorrow with the non-farm payroll numbers coming out. And then we would really see. Now, if we have an inside day, and I'm not saying we're going to, but if we do, remember, we'll still be one-time framing up, right, until you take out the previous day's low. So that would be one-time framing up for 10 days, but it would make it for a really, really nice setup. If you come out of it to the upside, guess what? Nothing's changed, and we're full bull on. If, however, you were to take out, say, an inside day to the downside, at least you would have stopped the one-time framing up in the daily and come into some sort of balance. So it could be interesting if we get that today. So if we're to trade up to K's high, I can take a short play. Now remember, any trade you take is in balance in value. They're not the greatest, but you can take a short play. I'd be out if we get accepted into M. I'd take about 50 cents worth of heat because you know the history of M. If we go up, get into M's range, and get acceptance, well, then you will go and trade the whole thing. So I'd be a short here, add on to it, out if accepted into M. Down here, you can take a call play. Accepted back into C's range, I'm out because the odds are you can test certainly the 6-wide POC and or yesterday's low. Again, if you're in CamelbackTrading.org's voice channel room, which, by the way, is talk about a global economy and a global market. We're a global trading room. Just had somebody sign up. We have Sweden, Finland, Portugal, Costa Rica, Germany, Canada. You name it, we have it in here. It's a great mix. So come check us out, and you'd be getting up-to-the-date trade ideas as the market evolves. And then, again, I'm just going to show you the daily chart, because nothing will change in the others until the daily starts to turn, right? One time frame it up 9 days. You got great distance away yesterday to the upside. So now the key, today could be a real big key. If we trade inside yesterday's range, great opportunity tomorrow. If we take out yesterday's low, we at least come into balance in the daily. If we take out yesterday's high, nothing's changed, and the bulls just carry on. The important thing, remember I said we're going to do about 70 million? Well, we did 69.5. The volume has been a little better the last 3 days. So I want to see, that's something to keep a really good eye on, because if the big boys are in here, the volume should pick up, and it should also prevent any kind of major flush, at least in the short term, from happening. Have a great day trading, and we'll recap at 4 p.m.